Welcome back, folks. Let's go out to Newport Beach, California, speak with Garo. Garo, thanks for calling. Thanks for holding. How are you doing this morning?
Good. Thank you, sir. How about you?
Very well. Thanks so much for asking. And the stock that we're going to review with Garo today is Facebook. So tell us what you're doing and how I can help you.
I was just looking at the chart on the daily chart.
Yes.
On the weekly chart, I didn't get that much of information. It has a lot of work to do. That Facebook has a lot of work to do on the weekly chart. But in the daily chart, approximately at the bottom of that, there was two possibilities. One was the gap on, have you ever seen those two gaps that it done in April and in July?
Okay.
Have you ever seen that?
That Facebook does gaps in April and July?
Yes.
I wasn't familiar with that.
No.
I do.
Okay.
I do.
One
I do see
was
that.
on 21st of April.
Yeah.
If you see 21st, there is a gap there, and that gap was 144.17.
Okay.
And yesterday it hit 149.02. That was the low of the day.
Yes.
Today it went up a little bit, and then now it's coming down again because it just hit the on the daily chart. It hit that 5-day simple moving average. It couldn't go any higher than that, and it's slided down.
Yes. Yes.
Yeah. The next gap is July the 11th. July 11th was 155.42.
Sure.
So that is in that neighborhood. Now is 155.26. It is right parallel to that gap of that July the 11th.
Yes, I see that.
Yeah. What I'm thinking that it's going to go down to that July the 21st at 144, that area, and it will stay there for probably a week to 10 days in that price. It will hover until they come with a good news or something like so, and from there it will shoot up. What is your idea?
So if I keep it, so that's great. That's great analysis out there, and thank you for identifying those gaps and sharing that with us. If I were to teach you the how to buy the D point of an A to B equals CD pattern, the lightning bolt pattern, then we would use this for instructional purposes. And I'm drawing in the A to B equals CD pattern. It looks like right now. The A point on this was the high on the trading session of February 1st. The low of the trading session of February 9th, which was a hammer candle, is the B point. About a 6.8, was really 67% retracement up into March 12th. And then we see that yesterday, the low was approximately a 1.272 expansion of that A to B leg. And it was a hammer candle. And that is where bulls were telling you, okay, there's a group of traders out there that believe that the bottom is in. That is really, a hammer candle means the market is trying to find a bottom. Now, Garo, that actually kind of fits with, or can fit with your scenario where we're going to see price kind of meander sideways here, because unless you close below the low of a hammer candle, then the bottom is in. Doesn't mean it goes right back up to the highs, but just says, okay, for now a bottom is in. So going with your hypothesis, this would fit the pattern that completed yesterday. If I were to teach you how to, now yesterday is a really large hammer candle. Because in taking a trade like this in Facebook, your stop would have to be, in doing a reward to risk analysis, your stop would have to be below the low of the hammer candle. And I don't mean 1 penny. It's got to be below the low of that hammer candle out there. And depending on what you're gauging as your reward out here right now, the reward's only 168.19 that I can see. You might have a different thing if we take a look at the parabolic SAR dots. But
you know,
if I were to,
approximately it's there. Yes. The numbers are very, very close by. Yes.
Okay, perfect. So we got two different systems. We're getting same numbers. That's nice for each of us out here. And if we were to teach you how do you really buy a hammer candle, you'd like to buy it at least about halfway into the wick. And it looks like today, that's where that low is. That's where that gap is that you're pointing out. So it's really in here. Now, it's still a really wide-ranging hammer, but it's $155 stock as well. So maybe it's, it's, and stops just simply impact your position size. Stops are supposed to be, you figure out how much you're risking, you divide that risk, whether it's $100 or $1,000 by the stop you're using. That's how many shares you buy. That's the reverse math out here for how to really control risk if you're going to truly execute your stops and exit if the trade goes against you. The Japanese, who developed these, obviously, Japanese candlesticks, when they were trading rice, what they used to like to do with a hammer candle, I don't have statistics, but I do know what they used to like to do with a hammer candle, is to buy a hammer candle where on days 3 through 7, price got into the center of that candle. So you're looking forward to, now you said 10 days, so that's kind of, outside that range. But and so day 1 didn't qualify for their methodology of buying a hammer candle. But if this does move sideways, it says Facebook may in fact have a bottom in place out there. And that's what I see. What I like to also see when there's a bullish reversal signal, though, if I were teaching you how to buy that D point, meaning the completion of the A to B equals CD pattern, is I like to see follow through on the next day, which would be much like the hammer candle, although the pattern wasn't there, much like the way that price responded on February 9th when Facebook formed a hammer candle, which was the next day price had moved a little bit higher. To me, that's follow through. Today is not follow through. So it says that you'd have to really be cautious if somebody were to buy it today. I know you wouldn't be doing that because of your parabolic SAR system, and even on the short-term chart, on the 15-minute chart, you don't have any type of buy that I can see out here. Is that how you're seeing that? So tell me what you're thinking now. Now that both our numbers kind of tie out.
You're absolutely right. As I said, this has a lot of work to do. It's not going to be a quick fix. Unless they come with a phony answer. I mean, they get the rabbit out of the hat
Sure.
for some news, and then they started to pull them up. Here, yeah, you're right. On a 15-minute, the short today, I shorted at 159.03. If you look at 15 minutes chart.
Yeah.
On today, you'll see that when the candle hit that dot, $159.03, that's where the short was on 15 minutes.
No, I see that. I see that, and I see your.
Yeah, that's
your
where I shorted it, and still I have it. And now it's making the bottom curve, and I will get out of it. I can. That's how I do day trading on 10 and 15 minutes. You see?
Sure.
Yeah.
So back to the weekly, because the weekly chart is pretty important, and you brought it up. When equities, commodities, anything makes kind of a significant top, it usually occurs with price moving higher doing less relative energy, and that's what these black lines refer to. And on the very next trading week, which was February 9th, was when you got your signal that there was actually problems in Facebook. This was ahead of the news in last week. Do you mind sticking through the break here? We'll just finish it off, or if not, I can finish it off without you and tell you what I'm thinking.
No, I'm done, sir. I've got my answer. I
Thanks so much for calling.
Thank you so much, sir.
Okay, Gerald. Have a great day.